How's it going, everyone? It's Sam. I want to talk to you about 3 pretty easy ways to become a millionaire. I realize on YouTube, I get in this habit, and I'm sure you do too. We get really into the weeds. We are looking at specific events for specific stocks, and you're looking at specific dates, and it can be stressful. You can be spending a lot of time on it. And some people just don't want to try to do that level of research to get a good return. So if you know someone like that, point them to this video. These are 3 different ways that you can become a millionaire. So I'm going to start with one that is the most simplistic and probably the easiest to follow. And it has a good return, but then as we move along, it's going to get to a higher return and a higher level of risk or work. But all of these are ways that people become millionaires, especially over the last couple of years. A lot of people have become millionaires from these different things. So we are going to take a look at it here today. First of all, if you guys don't mind hitting the like button, I really appreciate that. I want to thank Moomoo for sponsoring part of this video, more on that later. But we can start off today with dollar cost averaging into retirement accounts. Now, I put this into a 401k calculator. So let's say you make $65,000 a year as a family. That is about the average for an American family. Let's say you can contribute 7.6%, and I put it at 7.6% because that's about $5,000 a year. So that is just under $100 a week. Let's say you get 2% annual raises. You're currently 26, that's my age, and you want to retire by 60. Your average rate of return is 7%, pretty average for the indexes, whether it's the S&P 500, NASDAQ probably outperforms a little bit. But we're going to say your employer matches up to 4%, and they match 100% of that. So you get the free employer match up to 4% of your salary. By the end of this time, when you're about 58 years old, 59 years old, you're worth about $1.25 million, which is awesome. Using the 4% rule, that means you can spend about $50,000 a year, which would be about what you would need to if you were saving about this amount. So that's awesome. You can become a millionaire just by dollar cost averaging. Now from there, we can get into a couple different ways to make more money, maybe get to financial freedom a little bit faster, maybe a little bit more fun. But if you want to contribute to a 401k, and then maybe you realize, okay, I want to contribute a little bit more to a broker account, or maybe your 401k doesn't allow you to invest in individual stocks, that's where Moomoo can come in. So Moomoo is a company that I'm working with. It looks somewhat similar to Webull actually, but they offer some really cool things. So I'll play this on the side. They give you some free stocks. I really like it because they have some different tools for research that Webull and other apps just don't have. So you can see a very nice layout here. You can go to crypto, you can go to US stocks, you can get the news for the day. Some really cool things on the side here, like the top upgrades and downgrades on 8:30. Like that's pretty cool right there that they give the top upgrades and downgrades for the day, because all the time you'll see stocks moving and you won't really understand why until you get into the weeds. They also show some different strategies for technical analysis, which is pretty cool. So you can definitely check it out underneath the video. There are no fees to start trading. Like you don't get a $1 commission fee every time you try to buy a stock or anything like that. 0 commissions. You get a free stock when you sign up, and then you get more if you put $2,000 on their program or on their app. You get, I believe it's a full free share of GM stock, which is worth about $50. So that is cool. Definitely check it out underneath the video and use that link to get the free stocks. Now from there, you can actually dollar cost average into something like Bitcoin. This is going to be a little bit riskier than our last way to make $1 million, but you can see since 2011, so over the last, let's say about 10 years or so, 11 years here if you count 2021 year to date, Bitcoin has been the top asset class out of this list for 9 of the last 11 years. So you can look at small caps, large caps, REITs, preferred stocks, investment grade bonds, tips, gold, cash. There hasn't been much that's been able to beat it. There's only 1 year where cash beat it, and there's 1 year where REITs beat it. Now, over that time, the annualized rate of return is 230%. Now, I don't think it's going to continue growing at that pace. I think that would be asking a lot. But if you put $10 in for the last 3 years, $10 weekly, you would have a significant amount of money. I mean, When you start looking at how much you could put in, I mean, we're talking $8,000. When you barely put in anything, you put in $1,500. So let's bump that up. Let's say you put in $100 a week, kind of like we did in the other examples. For 3 years, you would have $84,000. Now I realize that doesn't quite make you a millionaire, but you start pushing this out a little bit, and let's say we actually do get a $1 million Bitcoin. If you could accumulate a little bit of Bitcoin every single week, you could dollar cost average to become a millionaire, and there are certain ways to actually get interest on it. So 2 different websites I use. One is BlockFi. I have $64,000 on there. You can see that is a decent amount of money. That's a lot of money. I have Bitcoin on there. They pay a different amount depending on how much you actually have in the app. So I like this because they have a credit card that I really like that gives you Bitcoin back. Also, they do pay interest, and you can actually take a loan from your crypto holdings. Now, I hold this, but also they pay a little bit lower on some of their, I'd say on some of the higher balances. So if you have a higher balance, maybe you have a full Bitcoin or half a Bitcoin or even a quarter Bitcoin, you might want to check out Voyager underneath the video too. So I have these 2 different brokers, and that's where I hold almost all of my different crypto because they pay interest. But Voyager has no limits on how much you can hold and get interest rates on. So if you guys want to check out those links, both of them are underneath the video, but you can get interest. So let's say you become a millionaire on Bitcoin, you will probably be able to get some interest from it. At least right now you would be able to get about 5 3/4%. So that's $57,000 worth of Bitcoin every single year in interest. So that is pretty awesome. Now the third way of becoming a millionaire, you can buy rental real estate. I realize that this looks confusing. It's not. We'll look at it. So this does not include any tax advantages, but this accounts for appreciation. This accounts for loan paydown and cash flow. So 3 great things. Now, I will say crypto is a little bit riskier. Even in Bitcoin, it's riskier than investing in index funds or real estate, but it will probably perform better. Real estate is going to take more time and will probably perform better if you do it well compared to index funds, but also it takes more time and there is more risk involved than index funds. So let's say you save up this first year, you save up $5,000, second year $10,000. You just continue saving $5,000 until you have about $50,000. Now this is 10 years down the line. I realize it's a lot of waiting on the sidelines, and this might not be the cost of a home in your area, $160,000. But even if you're in California, New York, you can always invest out of state. If you wanted to hire someone to buy a house, or you went over to Indianapolis and figured out a house, you could buy one for $160,000 at this time. And of course, the numbers are always arbitrary. 10 years from now, we could be looking at different numbers for houses, but we are going to look at $160,000. You put a down payment for 25% of that. You have $10,000 left over. You rehab it. Hopefully, if you put 10 grand in, you can get 20 grand worth of value. You rent it for the 1% rule, basically meaning whatever the home is worth, you can rent it out for 1% of that every single month. Some areas rent for way more than this, and some rent for way less. So I'm not saying this is easy. This is why it takes more work. You might not be able to get the 1% rule in your area, but a lot of the time you can find, class C or class D neighborhoods, and you can get 1% on them. So at that point, your mortgage would be $608. Other expenses, let's just say it's $700. That means that you have cash flow about $500 a month. Now, assuming 3% appreciation, this is the average debt pay down. So this is over the 30 years. If you take 120,000 divided by 30, it's 4,000. Now, how it actually would be paid down is a lot less would be paid down at first because you would have more interest. And then as time goes on, you would actually be paying a lot more than that as you get further in. But just for simplicity's sake, I'm gonna say $4,000 a month. So first home you buy, you get about $70,000 worth of equity. Now from there, each year we're gonna save another $5,000, but now we also have cash flow. So you have $5,000, then another about $5,000 worth of cash flow until you get up to about $65,000. We're gonna say then you decide to buy another home. You buy a $200,000 home, you put $50,000 down, you have $10,000 worth of repairs, so it's worth $220, and you have about $5,000 left over because you spent 60 of the 65. Then you get about $2,200 worth of rent. The mortgage is $760. You have $850 worth of other expenses, capex, vacancy, other repairs. You have about $600 worth of cash flow left over. At the end of the year, it's worth about $226,000. And then you have about pay down of $5,000 throughout the year. You have about $82,000 worth of equity. Now, when you do this though, you're looking and you still have home one. So home one's value goes up, let's say 3% a year. It's worth a lot more. Mortgage is getting paid down, and then equity is still $118,000, $130,000 by the time that you buy the second home. So you have now $130,000 in equity from the first home, $82,000 worth of equity from the second home. So you have almost about $210,000 worth of equity, and you have cash flow. So now you're saving $5,000 a year, but now you have two different rental properties that are giving you cash flow. We're not even accounting for raising rents in this example either, but you go along, you're able to buy a more expensive home. You can kind of break down the numbers here. I just did it for my own sake. So this one, we're gonna put $65,000 down. We have $10,000 left for repairs. We're gonna get $2,800 on the $280,000 home. And maybe it's a duplex, maybe it's a fourplex, maybe it's a single family, who knows, depending on the area. But this produces about $700 worth of cash flow a month. And then we go down the line until we've had 5 of these properties. So we've bought 5 properties. The last one is $400,000 with $100,000 down, $15,000 in, $30,000 worth of extra equity. After you put in the $15,000, you get $30,000 out worth of value. It is actually bringing in a significant amount more, about $1,200 a month in cash flow. And you can see that we built up a lot of equity. So by the end, you can kind of break this down. I have all the homes here. They've all appreciated. We've paid down the mortgage on all of them. This is how much we have in equity in the first home, second home, third home, fourth home, and fifth home. So overall, we have about $1.1 million worth of equity. And then we have cash flow of about $4,000. Now, if we assume that we actually raise rents, we actually get a higher cash flow than this, because how likely is it that by year 27, we're not going to have raised rents from year 10? Probably not very likely. Unless you really like the tenant, you'll probably raise rents at least a little bit. And if you raise rents 2% a year, that's about $4,500 by the end. So by then, we're millionaires. It's only 27 years in. So unlike the other scenario where we dollar cost average into index funds from age 26 to age 60, so that's 34 years, we are only going to work for about 27 years. And we actually have a decent amount of cash flow. In a couple years too, you'll see actually in about 13 years, we'll pay off the first home. We'll have a lot more cash flow because we won't have a mortgage. We'll get another $608 worth of cash flow every single month, which is awesome. Of course, repairs and other expenses will go up a little bit over time because there will be inflation if we have to hire a plumber or something like that. But we won't have to have any inflation with the mortgage because we will get a 30-year fixed mortgage. So this is a great way to build wealth. You also get tax advantages in this. We didn't take into account any taxes for this example, just for simplicity's sake, but you would get a lot of cash flow, a lot of equity. You have access to it if you have HELOCs. There's a lot of different things that you can do with rental real estate. Of course, if you are investing in Bitcoin, I think that will actually probably outperform most of these over time, but you are going to have higher highs and lower lows, so you have to be someone that is willing to deal with that. Now, of course, I want to hear what you guys think about this down below. Let me know which of these you like the most, which one you are focusing on. Maybe you're doing all 3. I know personally, I'm dollar cost averaging into stocks, into crypto, and I'm going to be buying some rental real estate here soon too. So let me know your thoughts. Thank you guys so much for watching, and hitting the like button. Definitely check out the link down below the video to get some free stocks. Thank you, and I will see you in the next video. Bye.